Scaling FinTech in the Real World. And for this, our final panel of 2025, the 10th anniversary, we have Sarah Gorman, Chair of FinTech Australia, Head of Growth at DAS. I need you to go wild! Come on, guys! Ian Cragg, the co-founder of Send Payments. Oliver Kidd, the founder of Archer and the hardest working journalist at Capital Brief. Bronwen Clune, come on up, Head of VC and Strategy Corresponding. One more clap, just a little one. Your picture's over there, Bron.
Hello. Afternoon. Well, it's day 2, late in the afternoon. We're going to try and bring the best energy we can to this great conversation about scaling FinTech. First of all, I'm going to let my panel introduce themselves and a little bit about their company. I will tell you quickly about Capital Brief because we are a startup too. We're a new media publication. We've existed for about 2 years in the market. I cover startup and VC, but we also cover general business, legal framework, politics as well. So we're a bit of a generalist publication and out there with a fairly positive view on innovation and things like FinTech. Hopefully more than some other publications, not yours, of course, Simon. Yeah, that's Capital Brief. Sarah.
Okay, so fantastic to be here. Obviously I wear 2 hats, FinTech Australia, the chair hat, but probably this afternoon I'm also speaking from DAS's perspective. We're an agri-FinTech. We've been in market for about 7 years. DAS is my 3rd company. We were founded to solve the gap between finance and farmland, particularly as climate change continues to affect rural customers and portfolios, and we embed geospatial intelligence into financial decision making so that basically rural communities can stay bankable, insurable, investable.
Thank you, great to be here. My name is Oliver, I'm the founder of a corporate credit card issuer called Archer. We issue commercial credit cards to wide range of businesses from very small cafes through to multinational law firms. The business was started some years ago. We started as something slightly different, looking at a consumer problem, but then a happy accident happened and I was abruptly declined for a commercial credit card from one of our major banks and thought that was a much more interesting problem to solve.
Hi everybody, Ian Cragg, Send Payments. First and foremost, thank you all for sticking around for this late panel session, really appreciate it. Co-founder at Send Payments, like I say, I've got about 18 years experience in the FX cross-border payments industry. Send Payments have been around for about 6 years, so I guess think of us a little bit like kind of Airwallex, but without the kind of valuation or funding that they've had, I guess.
Well, that leads me to an interesting question, Ian. When we talk about scaling FinTech companies, I think most people will put their minds to companies like Airwallex and those big outlier companies, but there's probably a more broad definition. I'd like to kind of get each of your takes on what you think of when we're talking about scaling FinTech companies. And do you see yourselves as one of those?
Oh, okay, all right, I'll kick us off. I actually think that too often we tell the story of scaling through the lens of the Airwallexes, the Upbanks, the Afterpays, and while I would say that DAS, potentially Capital Brief, Archer, etc. aren't there yet, they're actually representative of the great proportion of, or the majority of FinTechs, right? So all of us are in market for a certain number of years, we might be at a different stage of revenue, we're scaling through grit, resilience, just really hard yakka, basically.
Yeah, I mean, I agree. I think that there's, if the question's kind of like, do you think of yourself as a scaling FinTech, then absolutely. I think that, one of our investors we were talking to the other week, who's founded a range of very successful businesses, has said for every one of his businesses that he started, it's generally taken him between 7 and 10 years to get to anything meaningful. And these are like household name businesses that have done very well. And I think that's really important to keep in mind, that it's not if you're going from kind of, we're hitting $1 million in revenue or we're hitting whatever the number might be, it's not always the case that you can raise the $200 million round of capital and continue that go-to-market motion just at a larger pace with, say, triple the size of the sales team, 10 times the size of the sales team. It might be the case that you have to continue to grow and you have that product market fit, but you don't necessarily have that broader capital backing to say, well, now let's do this in 15 geographies and let's do this with 6 new go-to-market motions. And like Sarah says, I completely agree. I think that's actually the vast majority of fintechs scaling in Australia and in the region is pushing on making sure that you still see that really exciting rate of growth, but it doesn't need to be that that level where you're spending tens, hundreds of millions of dollars over the course.
So talk to me a little bit about it'd be good to get each of your reflections as a founder about that moment you kind of felt that shift from being a company that's out there, not just trying to find product market fit, but you found something that's working, it starts to grow, and now your emphasis is on growth and scaling. When was that moment for you? And maybe let's start with you, Ian. And what kind of shift did that require in your thinking?
So we've kind of pivoted quite a bit in terms of where we kind of first set out for in terms of our kind of client base. So initially when we set up, we were kind of servicing kind of retail consumers. By that I mean people like myself or yourselves who are kind of making cross-border payments. But as we managed to raise more capital, we obviously build better product. We can also again get a better team in place as well with more experience. So I'd probably say about year 2, I think we kind of hit that kind of like, let's say, eureka moment as such, when we signed a very, very large client and enterprise partner on board who kind of drove our revenue quite significantly and continues to do so as well. So that was probably the kind of the turning point for me from going from kind of I guess to answer your question, that's the kind of, if you ask for a moment in my career, that was probably the moment. It was when we signed that big partner, and that did kind of catapult us. And also, when you sign a large kind of client like that, it was client in question is PEXA, by the way, for all intents and purposes. To get a client like that on board as well, then other people are then listening. Okay, they're working with PEXA. Okay, so it kind of gives you a lot more credibility as well, and that's helped us now kind of sign more large enterprise partnerships off the back of that as well. So that was probably the kind of the turning point for me, I think, in our business. Was getting that kind of big partner on board.
Anyone else remember that moment?
I was going to say for us, I think it was very metrics driven. I think, as a founder of any business, you kind of look at your revenue growth chart and you want to see that exponential line. And, great, you have that exponential line and some years ago, you're going through those hundreds of thousands of dollars in ARR. And then it starts to dawn on you that the same team that gets you to that kind of point where you see this is not going to be the same team that maintains that exponential curve over the coming period. And that's not about people, it's about, quantity. And it's around trying to say, okay, we've demonstrated this product market fit here and we're really comfortable with what we've been able to show on these growth numbers, but to maintain, 20% month-on-month growth, whatever it might be, and stay in that category of, high growth, scale up, whatever it is, you need to have more go-to-market options. You need to be able to continue to support that. And it's not simply a matter of adding more salespeople and hoping that there's a linear increase in that number.
Yeah, look, I think for us, agri is really interesting in that the global landscape is really littered with startups that have gone big, the Indigos, the Farmer's Edge, etc. of this world, where they've gone super large, super fast, and then they've really floundered. So agri, like FinTech itself, operates in a very highly regulated space, and progress is really slow. Meaningful progress is really slow. I would actually say that one of the most exciting points for us has actually been in the last 18 months or so, where we've started to see the market really catch up to what we're doing, right? So unfortunately, as climate risk, as storms increase, floods, fires, etc., there is this understanding and a realisation that we actually have to act. I saw that really clearly earlier this year, actually globally, where the issue of insurability has suddenly become huge, and this idea that if it's not insurable, it's not investable, right? We've been saying this within the market for years, but it's actually probably only within the last 12 to 24 months that it started to really gain hold. When we started out, we thought we were going to change the world on valuations workflow. Surprisingly, that didn't change the world. We had the likes of, you know, $1 million contract with a large bank. We also had $1,500 credit card customers. What's taken us the longest and what remains my biggest obsession is repeatable sales and marketing, right? Like, what are the land levels? How do we bring more companies on to and clients? And this is what I've been talking a lot about the last couple of days with everybody around Intersekt, is what's the deal size as well? So everybody wants large B2B, but guess what? You know, the $1 million contracts don't just land in everybody's lap. It takes time, and normally the deal size is a little bit different when you're in that B2B space, which I think are we all in that space? Yeah?
Yeah,
I think so.
agree with that, yeah.
Yeah.
So, Ollie, you mentioned something that I think is worth picking up on when we talk about, you know, scaling companies, and that's the hiring. Like, when it comes to hiring people to scale fast, how you build those processes. What have you learned? I don't think any startup has ever stood up on stage and said, I hired the best people from day one. Everyone makes mistakes to get there. Be good to get some lessons from the trenches. Looks like you've got a story there, Ian.
I've got many stories. I'd say recruiting for us has probably been apart from raising capital, has probably been the most challenging part of growing the business, really. And that's going from everybody, really, from kind of like account managers within the business to kind of mid-tier managers to kind of C-suite, etc. as well. So we're on our third CTO now, and in 6 years. Thankfully, he's been there for the last 3 years, which is something, I guess.
You got it right eventually.
Yeah. But yeah, finding that right fit, and obviously it's so time-consuming, and I still think that since COVID, there's still a massive skills shortage here in Australia in the tech space. I really do, and we found that, and you'll see. And as you guys will know, if you've got a tech company and you're paying developers, product managers, product owners, you're paying them a pretty handsome sum of money as well. So that's probably been the biggest challenge for us, I would say, outside of capital raising, is definitely finding the right team. But thankfully now we've got a really, really low attrition rate in terms of kind of client churn, which at the start was a bit quite high. So we're in a much better place than what we were, but definitely agreed it's been a struggle.
Has anything changed about the way you hire to find those right people quickly?
Yes, it has. Obviously, we've gone down the whole kind of recruiter path and paying stupid amounts of money sometimes for recruiters. Most of the recent hires we've done have come through referrals, really. People in the company that know people, or reaching out to kind of your networks. Obviously, the bigger networks you have, like the FinTech community here, for example. Just getting, I think the more you're out there and about, and at the events like this here as well, you can put the word out and you'll get referrals quite easily, I think. And then most of ours have come, even our recent CEO hire came as a referral, as opposed to kind of writing checks for recruiters.
Anyone else got some lessons from hiring?
I would say making sure that you actually really want to work in startup. So strategy and execution, that's what I look for in people the most, and will they actually do the work, etc. We brought on, big senior sales hires in the early years. We thought we would, bring on kind of, star big company hires, etc. You get a little bit of funding, and guess what? You're pretty much flushing money down the toilet, in my view.
Yeah, it's interesting. I lived in the Valley for a couple of years, and everyone used to start, bring in big hires and say they were ex-Google. And I was like, well, Google's not a startup anymore, but you might as well be hiring from a big corporate.
100%.
You need people who can kind of really get in there and be prepared to roll up their sleeves. What about you, Ollie? What's your approach to hiring?
I think the biggest change from going from like a startup to trying to scale up is probably how we think about what we're looking for, which is, I think, the easiest way to put it is when we're very small, we're looking for people who are happy to wear multiple hats and do a million things and very enthusiastic, and that worked great. We had a lot of people, many people still at the business who do that. But I think when then you move into this kind of scale-up phase, it's more, the big realization was like, no, we don't have time for, enthusiasm is great, but we need someone who's like been there and done this and knows exactly how to build out the strategy that we think is going to work. And so focusing much more on just trying to get out of my own head, because as a founder, I love to save money and love to have people willing to wear lots of hats. But just trying to get that out of my head and say, look, we just need to hire someone who's going to wear one hat and wear it really well, and deliver a very specific outcome that the company needs, because that's why we're hiring this role.
So
One thing I was going to say as well, one thing I would definitely encourage, which we found it's helped us a lot, is giving your team some skin in the game, kind of our ESOP options, whether it may be. So all of our staff have got that, obviously on the basis they stay with the company. And give them some skin in the game, give them a vested interest in the business, because then they've obviously got something that they're building themselves as well. And we found that's been really, really helpful for us as a business.
well, we've ticked off hiring. Let's talk about raising money. And raising money as a company that's looking for growth. What was the shift in what you're bringing to investors, and what do you think is important to bring to investors when you're looking for money for growth and you're in that kind of scaling mindset? What was different in what you brought in earlier on to later?
I think early on we talked a lot about how big the market could be and how exciting this opportunity was, and here's how great this product is going to be. And then that very quickly transitioned to, have you proved that this go-to-market motion works, and how many times can you replicate it? And if more money comes in, can we have absolute confidence that you can expand and multiply the existing go-to-market motion and add more? And I think the other realization is that obviously a lot of investors are thinking not just about the round they're coming into, but then how this feeds into the next round that you're going to run, and what that's going to be priced at, and what you need to be able to prove by then. And then it's obviously a lot more about geographies and new products and being able to take existing customers and drive more revenue out of existing businesses and maintaining those low churn rates and all that sort of thing. So I think it's like obviously, as I'm sure a lot of people in this room know, it's like a completely different conversation, validating that you can take your go-to-market motion from, we're adding a couple of $1,000s a month in revenue, whatever it might be, to, but can you go from $5 to $10 million in annualized revenue in the next 12 months, and can you give us certainty that that's going to happen?
Well, that's the real conversation, right? It's actually not even around the raising the money. It's actually the crossing the chasm piece, which all of us on this panel are probably seeking to kind of hopefully not just cross it, leap across it in some case, but it is that, how do you do that? And I think at least for DAS, we've always been a little bit counterintuitive. We didn't want to take mainstream VC money. We did take CVC money. We've got high net worth on our cap table as well. We knew that the space that we were operating in was really, really hard, and we needed to have good investors around us, good partners. We do think of our investors as partners, as we do our customers as well. And how do we actually get some significant growth on the table? In the early days, that was really easy, right? Because you're doubling, tripling. Then it starts to kind of flatten out a bit, and then you've got to really work out where you're actually going to go next. For us, that's been because we can actually serve not just banking, lending, but insurance, other sectors, like we're actually also doing crop forecasting with our AI models, etc. It's like, where do we actually want to play? We really had to sit down and say, okay, for us, that's going to be insurance, because if it's not insurable, it's not investable. We knew that there was a $40 billion opportunity around that globally. It doesn't mean that we don't want to seek to still be dominant in Australia and New Zealand, and that's huge for us. But we want to have a really significant business, and I think one of the really good conversations that came up early yesterday was, what does a Titan look like? And Titans can be small, not just large, right? If we change the conversation from saying it's not just, 100, 500 million, $1 billion companies that look like success, but the 400, 500, 600 fintechs that make up this ecosystem, they are all Titans. Sorry, bit of a rant there.
No, you can rant away. What about you, Ian?
Yes, we've done about 4 capital raises from initial seed, which is probably actually the easiest. The seed rounding of the funding was probably the easiest, really, and that was kind of made up of kind of mainly high net worth individuals, as you mentioned a minute ago, sophisticated investors. And I think it was probably the easiest because we didn't really have any past track record. There was no kind of real benchmark to base that there on. But obviously, as the funding rounds have gone on, they've got bigger, but then you're obviously more accountable. each time as well.
Yeah, everyone's first round has that great slide with their
they
TAM.
get a big hockey
My
stick.
total addressable
Yeah.
market is $60 gazillion.
Yeah,
Wow.
yeah. And you're basically telling them what they want to hear, so to speak. But yeah, it's got a lot harder. It's got more accountable, but quite rightly so. You need to be held accountable when you're taking people's money. And I think, as Sarah mentioned as well, it's maintaining great relationships with these people as well. It's about communication. It's about being transparent. If things aren't going to plan, let them know. They're not going to crack the shits with you. Well, they might do, but yeah, we've always been very, very honest, transparent with our kind of investors in terms of keeping them up to abreast and communicate with them well in terms of what's going right, what's going wrong. Can we have any more help from you guys, etc. as well?
What's the most unexpected thing you've come across? Something you didn't assume would be big that you now realise is, you didn't see sort of coming up on the horizon? Anything you can think of that, was not expected?
Yeah. COVID?
Oh, yeah.
Other than that, probably not so much really. I mean, because in our industry, obviously, we're kind of dictated by kind of exchange rates, which are volatile, so we always keep an eye on that. You never know where they're going to go one day to the next. But no, nothing really has been kind of struck us really out the blue as such in terms of really had an impact which we didn't really kind of foresee, I would say, personally, apart from...
I don't believe you for a minute, by the way.
Everything went as
good
planned. What about you? Anything that, you didn't see coming, you've had to deal with, you've gotten through, and you think you're better for it?
I think one of the biggest ones for us, and I'll just be completely transparent, is you don't know when you found who you're actually marrying, for better or for worse. So the co-founders that we got together with at the very start were amazing people, right? Were they the people to lead DAS into the next stage? Actually, they weren't. The leadership team that we've now had in place for the last 4+ years, or around about since COVID, is the team today, which includes myself. That was one of the hardest things that we've ever had to do, was to say what was the right thing for the business, right? What was the right thing for our investors and our customers as well? Because the people sometimes that are really good in that super early stage aren't necessarily the people for the right next stage as well. And the other thing too is it's easy to found, right? Like, it's easy to found. It's actually the next...
I think, is that the quote of the day? It's easy to found.
I think it's, it's, are you actually going to keep going? Yeah. Is it the significance? What's the impact? Are you actually going to keep going? And I don't know, it separates people really.
So Ollie, I know you mentioned in the beginning you had a bit of a hiccup in the beginning where, what has been the thing that's kept you going through some of those sort of more challenging times?
I think when you can see that you're making really meaningful progress, it's, I don't know, relatively straightforward, and you still believe that what you're building is there's a huge market for it. I think it's quite simple to kind of keep moving forward. And to the previous question around what wasn't expected, which is kind of answers this, is I think the one thing we didn't really expect was like the last sort of 3 years where obviously rates have gone up a long way, and then capital markets for early stage businesses have dried up almost, I suppose completely in lots of ways for FinTech. I think continuing going through that period of time and still knowing that there's a really good market for this product. We've got great retention. Very, very little churn, all that sort of thing. The numbers when you're looking at your numbers, and the numbers all make a lot of sense. I think if you're a logical person and you can look at that and still understand the size of the market, then I think it should be straightforward to continue going and continue looking to grow the business.
So founding is easy, and it's straightforward to keep growing. Wow. Everyone should be doing it. Do we have any questions from the audience? I know I know energy levels are low, and we've got we've got to keep it up because we've got 40 pitches coming on stage after us.
Which
so
is
anyone
what
got
I love
any?
to hear.
Sorry?
Love to hear the 40 pitches.
Oh yeah, it is
50.
definitely. Is it 50?
I think so.
Okay, well.
It's 50.
50 pitches. Anyone got any questions out there in the audience? Is that a hand?
I can threaten to take away the wine again if that helps.
Well, before we wrap up, then, no questions, is that correct? I can't actually see out there, Simon. I've got my reading glasses on.
Jennifer has one, Bronwen.
Hello, something that came up on another panel was how do you balance listening to your investors, listening to your advisors, listening to your team, but also you're the founder? You know, ultimately you're setting the direction. How do you find that balance? And also, like, is it, you know, where do you find the mental peace? Sorry, existential question. Mental peace.
Well, there's many flavors of an existential crisis. No, I think that on the first point around like listening to investors, I think like the one thing is like no one's going to know more about your business than you. And I think it's not about saying to an investor, well, I know more about you, more than you about this business. It's about explaining your position and understanding, you know, these are the numbers we look at and here's why we think they're important. And what do you think about that? And so I think being more open and conversational about that whole piece around investor relations makes the whole thing a lot easier. And I also found that like when updating investors, like obviously more regular updates are better. And I also find, you know, I'd be much more stressed and have less inner peace when there were things like left unsaid out of those types of updates. And I think even just putting them in at a high level and saying, look, this is the stuff we're worrying about, that provides a whole layer of zen to your life, I think.
This is not something that's specific to DAS, but what I have noticed amongst other startups and beyond FinTech is investors in particular that have perhaps too loud a voice sometimes. So I'll take a little bit of a contrary view here to say that sometimes I see founders surrounded by 5 or 6 quite loud voices and all giving very different opinions on the business's direction and growth. I think that that's fantastic to have great advisory around you, but you have to actually make the decisions with the team and be 100% focused on what's next. And only you can decide that. And the other theme that I've heard come up a lot the last couple of days has been around belief. So, you know, the confidence part to actually be able to move forward and know that what you want to do, that you have confidence and belief in those next right steps that link to the impact that you actually want to have.
Last comment, Craig, before we...
I think we now become the busiest panel session now with everybody in there. This is fantastic. I'd say it's a very good question. It's a very fine line, very fine balance, I think. Particularly with investors, I mean, advisors you bring in obviously to advise you. So I take advice I learn from advisors all the time, every day. I guess with investors and shareholders, it's a bit different because not one of our shareholders has any FX experience, has been in FX at all. So I guess I kind of pushed back a bit then, saying like, I've been here and done it before, been doing this last 18 years. But yeah, it is a fine balance. It does have some heated conversations sometimes. But that's what it's all about, really. And they're there to challenge you as much as you are them. Yeah, but very good question. But yeah, it needs to be balanced well with the investor relations, that's for sure.
Awesome. So join me in thanking my panel up here, Ian, Ollie and Sarah. Thanks, and looking forward to the next 50 pitches.
And